Hi, everybody. Lance Browning, Income Solutions Wealth Management, here again this week. Just wanted to reach out to you and just keep you informed as to what we see going on. And we know our everyday lives have changed dramatically over the last few weeks as we work together to minimize the impact of the COVID-19 pandemic. We know these efforts are necessary, but they've also come at a cost. Global economic growth has been slowing. The U.S. economy likely will contract temporarily, and U.S. stocks have entered a bear market. Big stock market moves, both up and down, have become the norm. The yield on the 10-year Treasury note has fallen to an all-time low, making borrowing cheaper, think mortgages and those types of things, but it's also challenging savers. In short, this has been a challenging period for many long-term investors, and you're asking what's next and what to do. Despite elevated uncertainty, we've been encouraged by the actions of global central banks and governments to support their economies and stock markets through this challenging period. In the United States, the Federal Reserve, the Fed, has lowered its policy rate by a full percentage point, the first move that large since the savings and loan crisis in the late 80s, early 90s, bringing the rate to a target range of 0 to 1.25%. The full impact of lower rates may have to wait until loan demand picks up, but other Fed actions may provide more immediate support to help financial markets continue to run smoothly, bolster short-term funding, and increase market liquidity. Basically, they're printing money. At the same time, the U.S. government already has passed several measures to support the economy, and it's currently working on a major fiscal stimulus bill of at least $750 billion. We think it'll be more than that. Discussions are still taking place, but provisions possibly could include paid sick leave, expanded medical testing, unemployment insurance, direct financial support for consumers, and relief for some of the most heavily impacted industries. We get it. We know it's difficult to keep moving forward and looking forward with so much uncertainty and so many unanswered questions right now. But as long-term investors, it's important that we maintain a clear vision of our financial goals and our plan for getting there. Market volatility like we're experiencing right now may actually provide pockets of opportunity in suitable portfolios. As a recession and other bad news is increasingly being priced into the markets, stock market valuations relative to their earnings power and to bond yields have become much more attractive. Current uncertainty means taking a careful, measured approach, but for appropriate investors, there may still even be small ways to consider taking advantage of these potential opportunities. We think stocks on a relative basis are cheap. It's likely we may see an economic rebound later this year and into 2021 as the outbreak is constrained, businesses reopen, and fiscal and monetary policy support expands. The U.S. economy and corporate America have steered their way through world wars, cold wars, financial crises, geopolitical events, etc. Through even the most challenging time, markets have found their way to normalcy, and investors have been able to look to the future. We believe this time will be no different. So right now we see a fight between the coronavirus headlines and the Fed. Keep in mind the Fed has a printing press and the Fed is printing money. Trust your plan, stay the course, and be well. And as always, we encourage you to contact your financial professional with any questions you may have. Have a blessed day. Stay safe.